So, good morning, students. Welcome back to our online classes initiated by Rishiram Shikshan Sansthan, Joshar Uttarkashi. And today's subject is economics for class 12. And the chapter continues the methods of calculating national income. In the previous, we have learned about value added method or value output method. The second method is income method. Income method. So income method measures national income generated among four factors of production. The four factors of production. Four factors of production. So all the income generated from these four factors of production. Now, what are the four factors of production? That is land, labor, wages, rent, and interest. So from these, from the four factors of production, the income generated and profits in exchange to their factor services. And what are the profit in exchange to their factor services? That is, we are going to calculate in income method. And since net value added by an enterprise is outcome of services of factors of production, therefore the same is distributed among factors of production, and value of national income by this method should be same as calculated in the previous. We have calculated value added method or product method. So the steps to calculate national income through income method. So first of all, we have to, first step is identification. Identification of producing enterprises. So first we have to identify the producing enterprises. What are the producing enterprises are? For that, the producers employ factors of production like land, labor, capital, and entrepreneur. And the industrial categories of producers are basically industrial. There are three: our primary, secondary, and tertiary sectors. And after identifying the producing enterprises, whether it is of land, that is the producer factor, or we can say four factors of production: land, labor, and capital, and entrepreneur. And after that, the industrial categorization should be done, whether it is primary, secondary, or tertiary. After this, second step is classifying factor payments. Classifying factors payment. So we have to classify the factors of payment. So in this, we know the factors of payment. For example, compensation of employee, and our operating surplus, and mixed income, and or we can say self-employed. So we have to classify those factors of payment in these categories. So the first, compensation of, in this, so we have to categorize whether it is C, compensation of employee. In compensation of employee, is the total amount of remuneration in cash, in kinds, and in the form of social security contributions an employee receives from his employer in exchange for his factor services provided during an accounting period of time. So in other words, we can say compensation of employee is a reward for rendering productive services by the worker. So compensation of employee, as discussed earlier in the videos, we have told that compensation of employee can be either in the form of salaries, or in the form of free accommodation, or in the form of free midday meal, whatever. So those will be included in our compensation of employee. And now these are given either in wages, are given either in cash, and wages in kind. In kind we can say the non monetary benefits like free accommodation. Let's say if somebody is working for our employer, so he will be provided the free accommodation where he do not have to pay any money for the rent, or for, let's say, a single midday meal. So uh, those are in, we can say, in wages in kind. Those are not actually the monetary value, those are not the money value, it is just wages in kind. And the third is employer's contribution to social security scheme. So basically in the factor of compensation of employee, we can say it will be subdivided. First, whether it is wages in cash, or we can say wages in kind, wages in kind. And the third is the employer's contribution. Employer's contribution. Employer's contribution to social security scheme. To social security scheme. So wages in, we can say wages in cash, the services rendered by a person to the employer, and instead of that money, or we can say monetary value, given to the person. Second is wages in kind, as told, like free accommodation, or we can say medical facilities provided by the producing sectors, vehicle for personal usage. These are all are in wages in kinds. And third is employer contribution to social security scheme, and these are contribution made by the employers to provide for the social security of employees. The employees are not contributing to this, only the employer who have employed the person. For example, let's say I am working in this institution, so the employer, those who have employed me, I am the employee of this institution. So these scheme, or we can say these contributions, are done by the employer, not by the employee. I cannot make contribution in the social security scheme. These will be done by our manager and etc. So these are contribution made by the employers, not by the employees. I hope you understand the difference between employer and employee. So and for example, contribution made to provident fund, gratuity, retirement pension, or any other scheme for the benefit of the employee. So whatever from these contribution by the employer, the employees will be benefited. Let's say after working, after, if I cross over 60, my age crosses over 60, and after that the management gives me, let's say, pension. So these social security scheme are provided by the employers to the benefit of employees. So from these scheme, only the employees will be benefited. So after that is our operating surplus. First is compensation of employee. Second is operating surplus. Operating surplus, as discussed in my previous video, that it is the income from property. For example, from the property, we can say rent, royalty, and interest. And income from entrepreneurship. From entrepreneurship, it will be like profits. Profits will be from dividends plus corporation tax plus corporate savings. So we can say that operating surplus can be from rent. Second is royalty. royalty, interest, and profits. Profits are, now let us say, rent. Rent is a factor income generated from ownership of land and building. So rental income includes rent of lent out properties, the actual rent, and the rent of owner occupied properties, that is imputed rent. So the actual rent, for example, if a land is given for the, let's say, for a company, so the actual rent that person is acquiring, then from that rent operating surplus can be calculated. So second is royalty. In royalty, it refers to income generated from granting lease right and copyright. So whichever the lease paper, let's say I've given a land for 25 years. So for 25 years the lease has been paid to me. So from that you get royalty. Second is interest. Interest we are going to get from the capitals. So interest is a factor income generated from ownership of capital, and it is defined as the amount to be paid by the production unit for the use of capital, whether the capital is borrowed or the capital is provided by the owner. So from that capital, the from that capital the interest is benefited. So interest payment includes both actual and imputed interest. So both these will combine the actual interest and the imputed interest. Similarly in the rent, the actual rent and the imputed rent. So it is a factor payment made by the production unit for the capital borrowed for productive purposes. And now after that, profit. After interest, profit. So we have to remember all this, because in the calculation of national income, these will be calculated too. So we have to remember all these aspects, and in compensation employee what are included, because in sometimes compensation of employee is not given, but instead of that wages in cash will be given, employers contribution to social scheme may be given. So from that we have to see that all these factors have been considered in the calculation of national income. So we have to remember that operating surplus will include rent, royalty, interest, and profit. Now, profit is a factor income generated from entrepreneurship. The profit generated by the production unit is divided into three categories. So profit is then divided into three categories, and those three categories are dividends. First is dividends. Second is corporate tax. Corporate tax. And third is corporate savings. So in profit, these three are included: dividends, corporate tax, and corporate saving. Now, dividends, it is distributed among shareholders. So whatever profits are in the form of dividends, these will be divided in the shareholders. Now, for example, let's say there are four people who have uh, initiated, let's say, a business, and in this business they have gained a profit. So in that way the profit, if it is dividend, it will be divided into that shareholders. Let's say if there are four people, the profit will be divided in those to that four people. Second is corporate tax. Corporate tax is a tax on profit. Corporate tax is a tax on profit which is to paid, or we can say which is paid to the government. So corporate tax is a tax on the profit which is paid to the government. So that tax should be paid to the government. Then after that, corporate saving. Corporate saving, these are undistributed profit. These profits are undistributed. Corporate savings are undistributed because these are used for further investment, or we can say further plan. So these are undistributed profit which is retained or which is kept for the expansion of business, whether if you want to expand the business or for any other business you want to open. So the profit is divided into three parts, that is dividends, corporate tax and savings. So these three includes profit. So I hope so you understood the uh, factors of operating surplus. And after that, the third is mixed income. Third is mixed income. Mixed income of, or we can say mixed income of self-employed. So mixed income of self-employed. Now in this, income of own account worker, like let's say farmers, doctors, barbers, and etc. And unincorporated enterprises like small shopkeepers, repair shops, and etc. These are known as mixed income. So the income of let's say farmer, doctors, barbers, the income from these, and these are the income of own account holder. Let's say a farmer is producing in his farm, so he is generating his own income, and that income is not provided by any other. He is generating the income by his own. So it is the own, we can say own account. These are own account workers. So own account workers plus the unincorporated enterprises. Unincorporated enterprises like small shop, repair shop, or small shops, whichever we have seen in the market. These both include the own account worker and the unincorporated enterprises. These both includes the mixed income, and they do not maintain proper accounts. So these, like farmers, they do not have proper account. Let's say they are not generating income like monthly, yearly. They are generating income in, let's say, 6 months, because the production takes time. So the income earned will be, their time period will be 6 months, not a particular monthly income will be generated by them. So these are own account, and plus the unincorporated enterprises, these both includes in mixed income. So the sum of these both, or we can say in a simple word, that sum of these two, the own account worker and unincorporated enterprises, these both will make the mixed income. And second property of mixed income, we can say that they do not maintain proper account. Means they do not maintain proper account means there is not a proper there's a not a proper, we can say, purchase of things, or we can say not a fixed account. Like for example, if somebody is working under a company, he is being paid monthly, so his accounts details are provided monthly, he is receiving such amount of salary. But in this sector, in the mixed income, they do not have proper account, and they use their own resources. Farmer resources will be the land and labor, land, labor, etc. As a result, it becomes difficult to classify their income. So therefore it is kept separately, or we can say it is kept separately as mixed income, and it is not not like our compensation of employee or operating surplus. So it is now. Now let's come to the point where the actual, these are the factors which we have to keep in mind while calculating national income in income method. So in income method, these factors we have to keep in mind. Now after that, so calculation of domestic income, we can say calculation domestic factor income. NDP at FC. So then after the calculation, first we have to identify the identification of producing enterprises. Second is classifying the factors payment. We have to classify compensation of employee, operating surplus, and mixed income. And after that, we have to calculate domestic factor income, or we can say NDP at FC. The third step would be calculation of domestic factor income, that is NDP at FC, and it will be NDP at FC. NDP at FC will be compensation of employee plus operating surplus plus mixed income. So the third step is calculation of domestic factor income. The domestic factor income, that is net domestic product at factor cost. So to calculate that, we have to see that it is NDP at FC, net domestic product at factor cost, is compensation of employee plus operating surplus plus mixed income. Now in compensation of employee, all the factors will be included, like wages in kinds, wages in money, or we can say wages in cash, wages in kind, and employer's contribution to the social security scheme. So these will be included compensation of employee. After that, operating surplus. In operating surplus, all the interest and all which we have discussed: rent, royalty, interest, profit. And in profit, the three types: dividends and corporate tax and corporate savings. These will be included in operating surplus. After that, mixed income. In mixed income, the own account worker plus the unincorporated enterprises. Now the fourth step for the calculation, then we have to calculate national income. Calculation of national income. National income, or we can say NNP at NNP at FC. So after calculating net domestic product at factor cost, then we have to calculate national income, or national income we can say is NNP at FC, net national product at factor cost. Now in this, to calculate NNP at FC, so we have to NDP at FC plus, so we can say NNP at FC is equals to net domestic product at factor cost plus, now in national income, what we include in national income, net factor income earned from abroad is included in it. So then we have to add NFIA, net factor income earned from abroad. Then we can calculate national income. So these are the steps to calculate national income. Now, before going to the questions, let us just understand some precautions for calculating national income through income method. So there are, let us understand some precautions which we have to keep in mind while calculating national income through income method. So precautions for income method, or we can say so the first precaution, that is transfer income transfer incomes will not be included. So the first precaution that we have to keep in mind, that transfer income will not be included. Now in this, transfer earnings like unemployment allowance, like charity, like old age pensions, and all taxes paid by the production units such as excise duty, sales tax, etc. These are not included in the national income because such receipts do not correspond to flow of goods and services, because these not include in the flow or circular flow of goods and services, therefore these are not included. And those like which are like employment allowance employment allowance. I hope so you have taken a notebook and you are writing with me whatever notes are made here. So please maintain um, these notes in your fair notebook. So first, transfer income that will not be included, those are employment allowance, charity, charity, old age pension, old age pensions, and all taxes and all taxes paid by the producing units paid by the producing or production unit producing or the production units uh, production units, these all taxes paid by the production units, and these are excise tax, like excise duty, sales tax, and sales tax, etc. So these are not included, or these are transfer income. These are transfer income, and these income will not be included in the calculation of national income. Second is income from sale of second hand goods. Second hand goods will not be included. So all the sales of second hand goods, so whatever we are selling, that in the form of second hand, I hope you all know that second hand are those goods or services which are sold for the second time. So these will not be included in the calculation of national income. And any income that is capital gain by selling second hand goods like old car, old houses, and will not be included in the national income, as it has already been counted. Because when earlier, let's say somebody buys a new house on a let's say any place, so that is already included, that is already counted first time. For the second time it will not be counted again. Then after that, these will not be included because these have already been counted. And second, if it is included again, it would mean double counting. Means if for the second hand goods we are calculating in national income, then again we will face the problem of double counting. And in the previous video I have explained you about what do we mean by double counting. And after this, however, any commission or brokerage received by a broker middleman for transaction involving sales and purchase of second-hand goods will be included. So, in national income, since it is an income for the productive services rendered, so Second hand sales, second hand goods will not be included in national income. Third is income from the sale, income from the sale of shares, or we can say and bonds, and sales and bond, these are the financial assets. These are the financial assets is not included. So all the income from the sale of shares and bonds. So whatever shares and bonds, these are all share and bonds, these are called as financial assets. So from these financial assets, these are not included in the calculation of national income. So now financial assets, like we can say shares, debentures, bonds, and etc. will not be included in the national income, since such financial assets are mere paper claim. These are share and bonds, these are only paper claim. Therefore, it is not included in not included in calculation of national income. However, brokerage paid to the broker will be included as it is the income from the productive services rendered by him. So whatever the brokerage, the middleman receives the money, that will be included in this. So if somebody sells these shares and bonds, let's say I have bought shares and bonds from somebody through the third person. So whatever commission that third person is gained from me, that will be included in national income. But the shares and the bonds, the financial assets, the value of those financial assets, these assets will not be included in the calculation of national income. So further details we will continue in the next video. Thank you and have a nice day.